we have trillions and trillions of dollars in the world economy. But that's not the point. The point is, so, instead of talking, there's not a problem of capital. No, the conversation needs to be, how do we get the capital from A to B? And what does it take to take this capital from A to B? And in this case, the B being developing countries, because that's where most of the infrastructure investments will happen in the next decade, 2 decades, 3 decades. So what is it that it takes to take from A to B? And the public capital, that is much more constrained than the private capital, plays a critical enabler role, as we have been demonstrating. We humans are not great at change. We tend to be a lot more comfortable in what is known and familiar to us. And therefore, the difficulty we have right now in imagining and trusting in a very different future, and very different types of, societies. So, therefore, it's difficult for us to, to really think and pursue this, deep change. What these mechanisms do, and SIF as a great example of that, it demonstrates. The moment something is demonstrated somewhere, and then it starts to be demonstrated, in some other country or some other region in the same country, you now have people can relate or or hang on to that experience to feel more comfortable about more change or scaling up that type of change. Let's think of this example. We go to a supermarket and, we have a choice between organic apples and normal apples. And we know that the organic apples are better for our health, but we can't afford them. And so this is where, and today, in fact, this example of organic and non-organic products is actually a very topical one these days, because you have a lot of people with the view that governments and the public resources should be subsidizing what is well known to be much healthier, until the economics turn around and what actually is healthier becomes the norm and the most economical option to buy. So what you would want in that particular case is that the government comes in and the public resources come in to influence investment choices, to enable certain purchasing choices, in that case of the supermarket, so that we are seeing the outcomes that we need to see in society because of those choices. Climate finance operates much along the same lines, in the sense that we want to make sure that we are providing the resources that are influencing these investment decisions, so that instead of a government deciding to further invest or provide power to their citizens through fossil fuels, that they instead invest in renewable energy, until the economics have become such that those are the choices. So in fact, we also know that in our history of the fossil fuel industry has been highly subsidized throughout history, and it became the norm. Now we need to do the same, but regarding the cleaner options that are needed, given the challenges that we know are ahead of us if we don't. We know that the renewable energy, the cost of renewable energy have come down tremendously, very significantly, and these are now at parity or at par with fossil fuels in many places. In many places, they are below fossil fuel costs. But but it's not the case in all countries. So I think we have to be mindful of that. And we have to understand as well that in these types of investments, it's not just the cost of the technology that is important. There are other risks in these markets that, for example, imply that the cost of capital in specific countries is much higher than other countries. And so, when people are trying to get access to that finance in the local commercial markets to invest in those countries, and the cost of that capital is very prohibitive, that will have a bearing in terms of the financials of those same investments, renewable energy investments. We also have another thing which is important, which is information. Are people aware of the choices? Are people aware that there are other choices and what those other choices represent? And this is the point of access to information. I mean, we see the same on climate action. What we have seen is that, in many communities, in many countries, in many sectors, there isn't enough information to understand first what's climate change all about, how does it impact my life, what are the opportunities, can I be doing things differently, or can I be investing differently, and by doing so, I would actually be contributing to this global goal, but at the same time also making a contribution to my own family and to my own community. So to make it a little bit concrete, when we work with local commercial banks or local financial institutions in countries and work with them to understand, how can they translate this climate change action into lines of credit for their clients, being lines of credit for resilience or being lines of credit for mitigation for renewable energy or energy efficiency, for example. We are basically, and then in turn, we also support information campaigns or the dissemination of information so that the communities and the entrepreneurs understand, the options and how that can translate in different outcomes for them. Then you are tackling those two fundamental issues, which is access to information and people understanding about what we are talking about and what the opportunities are, and access to finance or providing the public finance that is necessary to start influencing the economics. I mean, I think just a few statistics and provide that, enlightenment. Various people, various studies have come out indicating that, the needs in terms of infrastructure investments are around 90 trillion by 2030. Well, if you think about it, and they themselves also say 2/3 of these investments are expected to happen in middle and low income countries. So just think about it. Most 2/3 of the population will be living with investment decisions that are being made today. Because we also know that most of the population growth, we know that in Africa and Asia, we are going to have, an additional 2.5 billion people in cities in a few decades. So if we think about that and, making an investment decision, a capital investment decision, that you are locking in capital for a really long time. So this is the relevance of this issue of infrastructure investments. Decisions we make today are locking us into a typology of investments that will be long lasting for 3, 4, 5 decades. And if most of these investments are going to be happening in developing countries, because that's where, we expect higher population growth rates, where we also, it's expected economic growth rates as well, then, to me, it's obvious that already we know that the largest emitters are in developing countries, or very significant emitters, and our expectation needs to be, because of these trends, that would rise, also given this gap in infrastructure investment. So it is really fundamental, critical, that we influence these investment decisions right now, today, in the years to come, because we do not want these infrastructure investments to be high carbon and not paying sufficient attention to climate risk. I think, it's a lot easier for people to relate to disasters because they become very visible and you experience them. It's immediate. And so that's always the difficulty of climate change, is that this is an onset, it's a gradually moving, and it gets to a point where it becomes irreversible, but it's slow moving, or much slower for sure than any of these disasters. But I think what we have to think is, I don't think messages like big scientific messages in international media is the way that you necessarily land that message. We have to relate to where people are in their contexts and tailor the message and information to those specific circumstances, communities, countries, because people are they are experiencing it as well, but they are just not calling it climate change, because for them, many of them, they haven't made that association between what somebody else is talking about at the national or international level and what they are seeing, at their own level. So I think, all countries are, certainly in developing countries and the countries that we are working in, all countries are experiencing it. Droughts, more significant droughts, more significant floods, intrusion of seawater, coastal erosion. These are phenomena that countries are experiencing, communities are experiencing. So, what needs to be done is work with those partners, governments and communities, in translating or connecting that global phenomena to actually what they are experiencing and what can be done at their level to contribute to those socioeconomic developments locally, while contributing to the global climate challenge. And not to make it very abstract, so let me give you an example. And actually, this is a project that I visited in Ghana. The communities, you have cocoa producers in throughout the country, and they have been operating and looking after these cocoa farms under this paradigm of sun-loving cocoa, which means that they were under the impression, also because for many years these were the practices also in neighboring countries, and that information passes from country to country, community to community, that you have better yields and production of cocoa if those cocoa trees are exposed to the sun. So what happens? You are observing deforestation of other types of trees around the cocoa trees. So you are observing a phenomenon of a deforestation. It's not that people don't understand the value of trees. They do understand the value of trees, but they were operating under a paradigm which is, I will have better yields and better quality of cocoa if my trees are exposed to the sun. Now, working with these communities and actually explaining and demonstrating is actually not the case. Actually, you will be having better quality cocoa if you actually shade-loving cocoa. So here you have a situation that by, and then, you explain to the community, not only cutting these trees is not giving you the higher quality cocoa and productivity that you're looking for, and therefore bettering your, your income. You also know that while you are cutting all of those other trees, you are also not taking other benefits from the trees. But at the same time, as we do this deforestation, we are contributing to this global problem, which is called climate change. So here's you know, an example of you related to the local circumstances and conditions, and you basically, I mean, I visited the communities, and you know, in that program of ours, we even had a famous local musician. You know, he composed some songs to convey the message to the communities around, you know, what climate change is, and why does it matter to the communities in Ghana, and why does it matter that by doing something, they are doing something for themselves, but to the greater good as well. So, and you have, you know, you know, all sorts of different examples like this. The message has to be connected to the local conditions and to the local circumstances. The moment that people understand that maybe if I do something different, that, you know, and that something different is better for my family, my communities, and globally to the global good, I think, you know, they will do that, and this is what we are seeing. These days, we see a lot of association between just transition and coal transition, or the energy sector transition, but we take a broad view of just transition. So to us, when we're talking about just transitions, we're talking about all sectors. I can speak a little bit more on coal transition because we actually did 2 case studies on just transition and coal transition, but just to say that it cuts across all sectors. So I think the first thing for all of us to realize is what I was saying earlier on, which is I firmly, and many people are of the same view that I am. I don't think we will be able to meet our climate goals if we are not paying attention to the social dimensions of these transitions, to the transitions being socially inclusive, because people will not support the transitions if they are not included, if they are being left behind. And how do you ensure that people are not being left behind? We basically, you know, to simplify this work, this analytical work, we framed it in there are 2 main principles that one needs to focus on. One is this issue of social inclusion of the process. Who do we need to be recognizing that maybe we haven't recognized in the past as critical groups to engage with? And second, are we empowering them? Do they have a voice? Do they have a say in these decisions? So that's one dimension. The second dimension is a focus on distributional impacts. You know, we have to think, while we are thinking about climate goals and specific results, we have to think about the social element, and the distributional impact needs to be at the center of that. We have to be thinking, okay, as we think about driving these renewable energy results or energy efficiency results, what are the different pathways? And are there pathways that actually tackle social inequalities that need to be tackled? Or is it likely that we will be aggravating the conditions of certain social groups? And what are the different pathways or ways we have to be looking or thinking about those investments so that we prevent that from happening? So I think these are the 2 fundamental pillars, because, you know, we have one case study out. And in fact, I think this week we just released the second one. We had done one in South Africa, and we've just published one on India. And what we saw in South Africa is an important illustration of what I'm talking about. We ourselves were also supporting, you know, the renewable energy program in South Africa. The initial, you know, renewable energy investments in South Africa. And South Africa has had a program to support private sector investors in that area. But these investments, where these renewable energy power plants can be built, are not the same locations where you have the coal-fired power plants. These are very different geographical regions. And so you see regions reaping the benefits of these renewable energy investments, while the coal regions weren't benefiting from similar investments. So what you start to see is, even though, I think, and this will happen in many contexts, even though the communities reliant on the coal mines and the coal-fired power plants do understand, the need to move forward to other clean energy sources, and they do understand the environmental and health impacts of what's happening in their communities. They are not being given opportunities to move away from that, dependency on coal mines and coal-fired power plants into alternative livelihoods or sources of income. So you start to see, social dynamics which are counter to the climate goals, that are actually opposing a certain trajectory of investing more and more in renewable energy, because other people are not reaping benefits, and they are being left behind and are concerned that they are going to be the ones bearing all of the costs. So I think, this is where we have to have this very clear in our minds, that as we are thinking about the climate goals, we have to be thinking about the distributional impacts across geographies in the same country. And what is it that we have to be doing in tandem to, support the communities that are likely to face the costs of these transitions. The case of India is also an interesting one. People can take a look, because, there are dynamics that are not just around the energy sector. There are dynamics around, other sectors as well. So in India, there's a very straight relation between, the coal sector and the railway sector in India. The railways derives a lot of revenues of transporting coal, and they subsidize public transport for the poor people in India. So the moment that, the coal sector is impacted by a transition, you have all of these other effects in the economy and society that have to be taken into account. So these are complex. This is also why we've just recently approved also a program to focus on accelerating coal transition. And we are promoting this vision, which is, let's look at these issues in a very holistic and integrated way, which means that we have to tackle the governance level. We have to see what are the changes in policies and regulations that are needed at different levels, and what are the institutional capabilities that are needed to carry through that reform process. We have to think about the infrastructure itself. How do we reclaim these coal mines, and how do we repurpose these coal-fired power plants or divest from them? But the third pillar of this approach is people and communities. What will it take? What will be necessary to make sure that people have alternative livelihood options, alternative economic opportunities through reskilling, through investment in other types of activity, of economic activities that can provide those jobs, but also ultimately. We have to think about social protection programs as well, because ultimately it is expected that some communities in that transition will need that bridge support. I think we are seeing change. The question to me is, will we have a change? Will we have the changes that are necessary at the speed and the scale that is, commensurate with what we need? This is, a big question mark. I think, we there are, I mean, there's also private sector and private sector. Our experience has been, that if we bring in the below market rate capital and are able to take on certain risks that private sector is not able to take, then private sector will seize the opportunities, the investment opportunities. So again, not to make it too abstract, I gave the example. You work with the local commercial institutions, with the local banks, and you support them in offering lines of credit for renewable energy or energy efficiency, or for climate resilience, for water efficiency, and they will offer those lines of credit. The companies will take on that finance, and they will be making the types of investment decisions that are needed. And we need this because reaching the climate goals means that we need we need this local, national, regional level action happening, not just the big multinational companies and the big investors. We've also seen, so that's one way that we've been driving private sector investments, and the local capital, really, the domestic capital being involved in these goals. We have also been supporting directly private sector investors in the energy sector in particular, and we are covering some of the risks that they can't take. For example, on geothermal power development, we provide financing that de-risks the early stage exploration of geothermal power development, because it's very, very risky, and then private sector can come in. So we see that. We also support other types of interventions where you have national structures aggregating small investments into platforms, and then we provide guarantees so that these platforms can also issue, for example, bonds in the local markets and raise capital. So this is something that we are seeing, and I think it's a model that works and needs to continue to be supported. And another big important issue is what it's called in the jargon institutional capital. These are the pension funds and the sovereign wealth funds and other types of institutional capital, and they represent a very significant amount of resources. And because of what I was saying earlier on as well, 2/3 of the infrastructure investments will be happening in middle and low income countries. So these are markets that this institutional capital hasn't privileged in the past, because they have alternative investment choices that are less risky. So what needs to happen there is, certainly on the regulatory side, is to make sure that on the regulatory side that we have transparency and we have disclosure in terms of where this capital is going. And so that's a movement that is going, which I think is really important. But beyond that, I right now observe that there's a lot of investors out there that want to start investing in middle income countries, in markets where they haven't invested in the past. But there has to be mechanisms and structures put in place to enable them to do so while not taking on risks which they can themselves not take. And so I think there's a lot of things that need to happen at different levels. I'm certainly, I'm certainly hopeful that, with what we are seeing at the policy level, at the political level and at the policy level, that all of these investors and companies will understand that not only they will be required to comply with certain objectives, but they also have to understand that people will be asking certain things. If they are not asking right now, where the markets are going is that people will be asking certain types of product with certain characteristics that meet certain objectives. And if these companies don't understand that and try moving away in that direction, I certainly think, like others have said, that they will be out of business sooner or later. So it is a matter of, I think we have, and Mark Carney has articulated it well, and I agree with him. You have one issue, which is stranded assets, because we see, particularly those investing in fossil fuels, because we see increasing policy and regulation that will ultimately lead to that. And then, we see that the future economic opportunities and the future products, the new industries, will be, industries and products that align with these objectives over time. And so, companies have to be mindful of that. I mean, it speaks to who we are as humans to some extent as well. In face of adversity, it's a lot. It's a lot more straightforward to go with what is known to us than to really think of very disruptive ways of moving things forward. So I think, I think we haven't fully captured the lessons of that COVID-19 has brought, because we all know as well, and we heard the likes of Bill Gates and others say, the fact that we were hit by COVID-19 was expected. And in fact, the specialists had been warning for some time that this should be expected, and that the health systems would not be prepared to take on a pandemic like this. So, and still, governments didn't necessarily do what they were being advised to do. The difference between this COVID-19 and climate that, I think many people haven't fully captured is, while COVID, you have this very significant impact. I mean, and it has been an unprecedented impact in my lifetime, and for many people for sure. You can recover from climate. You are basically creating a situation of cumulative effect, and you reach a point that the impacts can be so great that one can't really see how one would tackle them. So I don't think we have fully captured the lessons of COVID-19 when it comes to what we are seeing in terms of these fiscal stimulus packages. And I think, it's not easy. I know it's not easy, but we really need leaders to have trust in a different type of future and in different types of investment. So we need, we certainly need leaders that are not considering bailout that can benefit industries or business models that are not viable in the type of world that they know we need to create, which needs to be low carbon, net zero by mid-century. And a lot of people, did quite a lot of work in the early days of COVID, and wrote and advised governments on the fact that there are actually investment alternatives that can generate the type of recovery that governments were looking for, while generating the jobs. I mean, one of the big issues was jobs, and how to ensure that people continue to have jobs and sources of income. So there's a whole array of investments that can be supported and should be a much higher part of those packages, of those fiscal stimulus packages. Some of the things that we've talked already before, strengthening the power systems, investments in smart grids, investments that will support this low carbon transport, the transition to low carbon transport, investments in energy efficiency, investments in, for example, hydrogen, in storage solutions, including batteries. In the area of nature, nature conservation and nature-based solutions, which are known to be highly relevant when it comes to providing jobs to local communities. So restoring degraded land, supporting watershed protection. So there's a whole array of investments that should be supported at the moment vis-a-vis other alternatives. And I hope it is true. I mean, what we are seeing, and every time there is an analysis, what we see is big time, investments and stimulus being put into industries that we know are not, the industries of the future. So it should be a cause of concern to us, and hopefully, governments still have some time to reverse some of those potential decisions, or really focus more of their future decisions in these types of investments. This is a cause that speaks to me very closely, because we all know very well, I mean, we need both women and men to tackle this challenge, and we need this diversity and the difference of perspectives. Women bring, I mean, we do decisions differently. We manage things differently. We bring different perspectives, and that diversity and richness, we are not benefiting from it fully at the moment because there is no gender equality, and that's what we need to change, and we need to recognize that two things. One, for sure, that women have been disproportionately impacted by climate change, and this is also known. I mean, the UN has indicated itself 80% of people that are displaced by climate change globally are women. So we certainly, and we can't think that the solutions that we think for men are the same for women. No, they are not. And then, but more than that, I think that's a very important point to acknowledge and recognize. But more than that is, are we fully recognizing and the agents of change that women are, and how powerful they are, and the massive contribution they can give to to these challenges ahead of us? We are not fully. And it shouldn't be necessary, but it's good. In any case, it's good that reports like, there was also this report by McKinsey that said if we had, if we really had gender equality, we could potentially be adding 12 to $28 trillion to the global economy by 2025. I mean, these studies are important because it's sort of, certainly for people that are quite data driven and decision makers, that for them data is important. This is quite important information to have. But I mean, we know that we have, if we strive to have gender equality, we are certainly going to be having, different outcomes, and are much more likely to meet the goals that we are talking about. And so, I mean, let me give you another example of this deliberation point that I was making. We have supported some, again, working with some local financial institutions in Tajikistan. And, lines of credit can be structured and still not be benefiting women. It is necessary to be deliberate. So because, part of our objectives was, let us, through this support to local commercial institutions, also make sure that women are having access to this finance and being able to also make, investments. So, this point of deliberation. So there were specific things that were made to make sure that that objective of access by women to this capital was reached. One is women's help desks. So there were desks in these local commercial banks to help women access this finance. There were different collateral requirements that were put in place, which were not the conventional. So just to give you an example, which is jewelry was accepted as collateral to access this finance. And so you see, you start to see, the banks committed, to having women as their staff, to be able to work with the women entrepreneurs in helping them have access to this finance. Even in terms of how does this information reach the communities? How does this information reach women? What are the different ways and means through which women access information that is not similar to the same way men access information? So all of this, if there isn't deliberation in action, we are not going to see the results. I mean, this could have been done in just a standard way. And yes, we would have had, enhanced access to finance for climate purposes, but we wouldn't be driving gender outcomes and actually influencing gender norms. So what you see, for example, in this particular case is that we started to influence, gender norms. So now women were having the possibility of, were being part of, investment decisions in the household, in terms of, for example, purchase equipment, which they weren't entitled to be part of before. That's when you start to see, and I always say, the moment you are capable of influencing societal norms, social norms, then you are doing something very significant, because, you are tackling behavior change. And we know that behavior, are the most difficult to change, but they are also, very significant, because they are lasting. So this is certainly, an area which, of course, we know all of this these are all part of the SDGs, and because there's a strong recognition of how things are interconnected and the importance of the various things. But I think and call on everybody to really pay attention to this dimension of women's empowerment, gender equality, making sure that their voice is heard and that they are part of decision-making processes. I started off my career as a development practitioner, and not on climate change, because at the core, what I've always been driven towards was, tackling poverty and in making sure that people had the opportunities to pursue the lives that they are aspiring for. But, I started off in Africa, and I lived for several years in sub-Saharan Africa. And in fact, I was living in Mozambique at the time of these major floods, which made, international headlines, very significant floods. So, in the countries in Africa, where I have lived and I have worked, I actually saw firsthand, droughts and floods and coastal erosion and sea level rise and the impacts, in people's lives and in the environment. And then, I went to East Asia. I lived for a few years in Indonesia as well, and same thing. So, and that's what then, triggered me. And, I didn't make the immediate switch to work on climate change and climate finance. I decided that I was going to go back to study and study a little bit of the science and the economics of it. Because, at that time, it was controversial. You had scientists saying something, and then you had other scientists saying something else. And, so I wanted to have a clear view for myself. And to me, it was very clear from that point onwards, it was very clear that, caring deeply about poverty reduction and development. I mean, if we don't tackle, to me it was clear, if we don't tackle climate change, none of this is going to be possible. And in everything, one of the key messages for me is that if we want to see change, we have to be deliberate about doing something about it. It's not just going to happen because we talk about it. Talking about it is important. Of course, it's a first step, but we have to be, in fact, in terms of a lot of things that we've talked about today in this interview, deliberation is really important. If we are persuaded and convinced that we need a certain outcome, then, we have to make sure that that is brought into what we do. People have to realize that they have more power within them that they think they have. I like to say that, we are consumers, and so we make the decisions about what we buy and don't buy, and that certainly influences corporations and the private sector. We are investors, so we also make investment decisions for those that are in a position to do so. What are we investing on, and what are we not investing on? We are, for those in age of doing so, we are voters. So we actually have, well, in democracies at least, we have the power to decide who we elect to offices, and what these officials stand for. Do they stand for what is really critical for us? So I think, we have to understand and not think that, oh, we are passive agents of change and it's all being decided by these governments and these private sector institutions. We have a lot more power than we might sometimes be recognizing.